Right, the Edelweiss ET Now lead indicator index for the month of July is out. The reading has come in at 110. This is opposed to a reading of 106 for the month of June and a reading of 97 for the first quarter of the current financial year. That's April to June of FY13. To get a better sense of what the index is made up of and what really the outlook is, we've got Mr. Nishchal Maheshwari, who's head of research at Edelweiss Securities, joining us now on the show. Nishchal, to begin with, a reading of 110 for the month of July, would you say that things are looking better? Because on the face of it, they don't seem to be looking that way.
I agree to you basically. On the face of it, doesn't look better. But I think this is a one-off number, and as I've been telling you on my earlier visits to your program, this is a combination of around 9 factors, and the factors which have really impacted this time has been the cement dispatches and non-oil imports, with both of them around a couple of quarters back were pretty strong, and that's why you have seen a positive number out here. But I think what we should focus on is a long-term average, and long-term average for the quarter, which you were quoting the number as 97, is much more in sequence. So 97 is actually just telling you that we are sort of close to the bottom, or rather we have just taken off from the bottom. So at least the indicator is telling you that we may not go down much further from here.
Nishchal, taking a look at some of the concerns that you've highlighted in the report, it's the global economy which is entering a phase of synchronized downturns, plus some of the policy decisions abroad. How dependent do you think the overall Indian growth story will be on global factors vis-a-vis our own problems back home?
If you look at it, the Indian GDP, the connect with the international GDP, in the last 3 decades, the dependence of the Indian GDP, which was as low as 30% around 20 years back, couple of decades back, basically is now grown to around 65-67%. So as your exports have been growing and exports are becoming a larger percentage of your overall growth, I think that dependence keeps on going up. So I think we are very much related. Stock markets are just a mirror image actually.
Right. Now, Nishchal, just a short while ago, we had one of the directors at the Indian Meteorological Department join us on the show talking about the likelihood of the rains this year being the worst in 30 years. Now, once you factor in that as well into the EELII, should we expect that the reading could possibly look a lot worse?
Definitely. But I have to highlight here that this is a non-agri GDP. So we really do not look at the agri part, which is a direct impact. But definitely, if there is an impact like that we may have one of the worst rains in the last 40 years, then your GDP itself is going to get downgraded. Secondly, your production, definitely the industrial production and all will all get impacted, and similarly the consumption side. So I think that will be having a very negative impact.
I was, talking about a poor rain from the rural consumption story point of view, because in past years we've taken the rural consumption story for granted, and we've, kept harping on the point that irrespective of what happens, elsewhere in the economy, rural consumption will hold up growth. Would you say there is a worry today, based on what the IMD is saying, that rural consumption could come under pressure?
Definitely, I think in our last surveys which we have done in the last 2 quarters, and especially a more recent survey, we are definitely seeing signs of slowing down, whether it is in the auto side or whether it is the discretionary goods. There has been a definite slowdown as far as the rural is concerned. We have as yet not seen much pressure on the FMCG, which is your fast-moving consumer goods basically, where it is more immediate consumption. So that we have still not seen much pressure there, but I think on a durable as well as on autos and all, we have seen a clear pressure coming in.
Sure, Nischal, and with respect to the kind of activity we've seen in the auto space with respect to the two-wheeler numbers and the high interest rate environment, what would your view be on the sector as a whole and as well as individual counters like a Hero Motor or a Mahindra and Mahindra?
In terms of autos, we see definite slowdowns as far as Maruti is concerned because of high interest rate and cost pressures being there. So I think Maruti will be under pressure. As you know, Tata Motors is more of an international story, and that continues to do well. Ashok Leyland is definitely under pressure given that we have got a slowdown in the industrial production, and IIP has been a indicator which is always gives you a lead indicator as far as the truck sales go. What we like in the whole space is the two-wheeler, especially Bajaj Auto, where around 30% of its production is coming from exports, and that continues to do well for them. And with a depreciated rupee, I think that looks pretty interesting. I see in case of Hero Honda pressure of competition building up, Honda being pretty much serious, and as they get their act together in terms of production as well as more outlets, service stations and all into place, I think they could be one of the serious competitors, especially on the 100cc bike. So that's why we are not very positive on Hero Honda. The two stocks which I like in this space is one is Bajaj Auto, and the second one is Mahindra and Mahindra.
Right, and Nischal, just you did make mention of the rupee. We're seeing it sitting well below 57 in trades today. Would you say it's fair to assume that the rupee is possibly seen its bottom, and that from here we could possibly see it appreciate to maybe 56, 55 half levels?
If you really look at it on a RER basis, then rupee valuation is close to around 53, 53 and a half. So definitely your rupee is in a zone where it is now oversold. And it is cheap at the moment, but the short-term concerns may still drive the rupee to whatever levels, and that technical side you really cannot figure it out. But we are very sure that I think by the end of the year, rupee should stabilize around 53, 54.